Banks should have a full 360-degree view of all of the inbound and outbound payments across all of those rails. So they shouldn't be looking at fraud risk or evaluating a transaction in isolation at that particular rail. They should be looking at it collectively across their enterprise. And so really from a cross-channel perspective, that's what I was highlighting, is having the fraud detection and mitigation capabilities that are continually scanning across all of the rails that they're participating in.
Hello and welcome to today's session. We're going to be talking about instant payments and real-time payments. We're going to have a webinar on that. I want to thank the folks for joining us today. And I wonder if you guys could go through and just introduce yourselves. I could talk about what we're here to do after we go with the introductions. And I see you on screen as Jessica.
Hello, everybody. So I am Jessica Hayes. I work at Digital Federal Credit Union. I have been with the organization for just about 26 years now. Since 2012, I've worked in our ACH wires area. And we introduced our FedNow payments receive only in April of 2024.
Thank you. Karuna?
Hey, Joe. Thank you for having me here on this panel. I'm Karuna Kathir. I manage the revenue operations team at Finzly. I've been with Finzly for about 5 years. I've been in the industry for over 15 years now. And Finzly essentially specializes on payment solutions for banks and credit unions here in the US. We're the only provider to offer all types of rails in a single system in an efficient manner for our FIs. And we went live on RTP about 3 years back, and we went live on day one with FedNow as well. We've been live on both networks, sending and receiving, the last couple of.
All right. Thanks, Karuna. And Nick?
Thanks, Joe. Nick Denning here. I lead product and strategy for ICBA Payments. ICBA Payments is a reseller of payment solutions to community banks across the country. And from an instant payments perspective, we do have a partnership with Pigeon, who is one of the industry leaders helping to enable instant payments for community banks as well. So happy to be here and looking forward to talking instant payments.
Excellent. And as you can imagine, I'm Joe Casale. I'm happy to be here. I work for NEACH. Happy to be a student of this topic and being able to share with everyone. As you can imagine, we did a walkthrough of this session the other day. It is such a great cross-section of viewpoints. I think you're going to enjoy what we have. Let me jump in with beginning with the questions. And we're looking at instant payments right now. What are we seeing in the industry? How are things working? So let me kick it off with, for 2025, as the year of instant payment of real-time payments, it's looking good. And I wonder, in 2024, we saw that RTP processed 246 billion in payments, with 343 million transactions. It's a 94% jump from the previous year, 94 jump in value and 38% in volume over the previous year. With FedNow, we've seen the onboarding of I think it's up around 1,200 different institutions right now and growing. And I wonder if you guys have any opinion on what we're seeing, what you're seeing, what you're experiencing from your point of view. And anyone who wants to go first, jump in.
Yeah, I guess, Joe, from my perspective for community banks, we're continuing to see a lot of community banks that are jumping into the fold from a receive-only perspective. As we look ahead to the rest of this year in 2025, we would anticipate a continued trend of more of the same, continued uptick in volume, value of transactions, participation, and so forth. But at the end of the day, the volume is still driven by a relatively small number of subset of use cases in sending FI institutions. So for community banks, as we look ahead, participation step one, but really starting to get involved in the send activity will be the next phase of growth for community banks.
Excellent. Excellent.
Yeah, and I can speak, from a DCU perspective, we are a receive-only financial institution at this point. When we first onboarded FedNow, we were actually very surprised with the volumes that we started seeing pretty much right off the bat, but it is very similar volumes that or the same kind of vendors that we're seeing sending transactions through the FedNow network. We're seeing a lot of investment companies. We're actually also seeing a lot of gig type transactions. So Etsy and Grubhub, so we're seeing a lot of potentially payroll type transactions coming through, and do anticipate to continue to see that throughout 2025.
And Karuna, what are you seeing?
A couple of things, Joe. Obviously, we're seeing a huge demand for both FedNow and RTP, right, in one form or the other. A lot more financial institutions are aware of it and want to offer it to their customers. We're seeing a huge jump in terms of number of FIs asking for this. We're also seeing the uptick in terms of number of transactions, number of banks doing send is also increasing. And what we're going to see in 2025 is that it's literally going to double. The number of institutions offering FedNow and RTP is going to double. And I would also expect more institutions offering send capabilities. I would expect RFP, request for payments, to increase. And some of those signs are already showing up, right? RTP released the 10 million upgrade on the limit, and Finzly set up that 10 million limit on day one. And we are seeing so many transactions on 10 million.
Super interesting. I did see that $10 million increase. That's new this year. And I don't expect the Fed to say, well, they're doing 10 million, we're going to do 10 million. So it'll be interesting to see what happens with that. You know, Nick.
It would take time. It would take time, Joe, for Fed to offer the same, but the volume is going to increase because of that, right? The volume of transactions going through instant payments is going to phenomenally increase this year.
Yeah. I mean, in the old days, you'd go look at a chart of, say ACH volumes, and you'd see this, hockey stick effect. We're at the very beginning, I think, of the hockey stick. So we don't know, what's the natural volume that should be running over these rails. Nick, moving on to a new question. Nick, you're with an organization that focuses on community banks. Any comments on how it is working for them? Is it making them more competitive? Are they offering new products? Are they hot to get into sending, or they're waiting for the rest of the industry to come along? Thoughts?
Yeah. I mean, I think kind of along the lines of what I shared before, I think it's still early for community banks. Community banks are anxious to ensure that as the market matures, that they're able to deliver those competitive payment experiences, right? And so at this point, they're really waiting for some of the provider costs to come down. They operate in very much of a leveraging solution providers to enable instant payments. Also waiting for all of the integration touch points to occur between providers, processors, digital channels, cores, and so forth. And that's still taking a little bit of time. But community banks are really excited for this next phase of growth, and specifically with respect to their business customers and the ability to promote some really good, seamless, and faster payment experiences for their business customers. So I think that'll be the next exciting phase of growth for community banks.
And I was super interested. I think it's all starting to roll in together. We were on our practice call the other day, and Jessica pointed out the gig economy and the wealth transfers were, a lot of what she was seeing. And there's an article out there that says the gig economy and wealth management are what everyone's seeing. So it's really interesting where it's going, how we thought it would go, and how we see that it is going. Now, Jess, you're receiving FedNow now, and do you see it as a competitive advantage? When do you think you're going to send instant payments? What are you hearing from other institutions just like yourself? Anything you want to share on that?
Absolutely. So I do think that it is a competitive advantage. I think for our members to be able to receive funds instantaneously in their DCU accounts, it does help them I feel like it could help them with their financial situations, especially those members that may be in the gig industry and they're getting their paychecks, almost instantly, as opposed to waiting for the traditional paycheck that they would get once a week or biweekly. So I definitely think that is something that is very beneficial. From a send standpoint, I think like a lot of people, we're kind of in a wait and see. It's definitely on our roadmap. I definitely think that there is a lot of competitive advantage that can be gained from sending through the instant payment network. There's also a lot of uncertainty just with fraud. I mean, I think fraud is everybody's top priority. when it comes to sending money in any channel, but specifically instantly. But it could open up a lot of competitive channels that way. I think of things like funding a loan instantly as opposed to sending out a check, whether it's through FedEx or the regular mail. Instantly funding a loan is huge for members. It could also provide some competitive advantages for how we might bundle, certain membership options. If you do this, and this, maybe you get some free instant transfers as opposed to having to pay for that. It could be a revenue generator for a financial institution as well. So I think that there's a lot of opportunities that instant transactions can bring to a financial institution. But for us, we're waiting to be able to send at this point.
Excellent. Before we go to the next question, any comments on that? Karuna, Nick, are you seeing more sending than you thought?
We're starting to see that trend. There is potential revenue to be made. And like Jessica was pointing out, there are specific types of use cases that are prime for this. Like you want certain payments to be done over weekend. You don't have an option today. So every institution that can identify some of these opportunities and capitalize on them are starting to stand first, right? So we've had so many of those institutions come to us and start those conversations with us. Some of them are already live on RTP or Fed now doing send. So we do see that numbers going up at this point.
And Joe, I would just also add that one thing that will really help on the send side as we proceed on this journey is as industry brings forward some really scalable directory capabilities, such that as we're trying to support really smooth and frictionless payment experiences, that there's support for alias-based payments and easy ways to identify recipients for business payments and so forth. And I think once those start to proliferate, you'll really start to see the send environment take off across the spectrum of size of institutions.
I think there are some milestones, if you will. I don't want to call them hurdles, but a directory-based service would be a huge benefit to being able to send consumer payments. A business directory would be, huge to increasing business volume on these things. And, someone, I think Jessica, you mentioned faster payments equals faster fraud. We at the association certainly get opinions around things. This is truly just an opinion. We haven't seen it yet. So I know we have faster payments flowing. There's more and more of them. We haven't seen that breakout event yet that said, see, we told you there was going to be more fraud with faster payments. Haven't seen it yet. And I was literally at an event on Friday, and what phrase do you think came up? Faster payments equals faster fraud. And I almost jumped out of my skin. I think I actually grunted or something because people looked over, but we're not seeing it. But they were at the event, to point out directories, the infrastructure. More of the infrastructure would be so much more helpful. And while I interrupted with a bunch of words just now, just want to remind folks, this is an educational event. We're not promoting anything. We're not highlighting any vendors or anything. But with that being said, and I don't know if we have this later, but Karuna, you're offering, and not to promote, not to rate you, but you offer everything from an infrastructure perspective, correct?
Yes. The couple of things that we really think it's key in this market share. So one, Nick was talking about this earlier, right? And your question of smaller community banks that require to offer this service, they need a reason, they need simplicity in terms of how to get there, right? They need repeatable processes, but they also want somebody to give them an environment and keep the environment up to date. Fed or RTP changes their rules, their guidelines, their messaging standards. Somebody has to maintain those up to speed, right? Every year and every day. But also, as you get into number of rails, we had ACH, then we added wires, now RTP Fed, now then FX. How many of these can smaller institutions manage, right? That's where having an infrastructure that can bring all of them together in a singular platform, that payments is payments, so we can go away from those individual rails And that's essentially what we offer in the market, one of the key call outs for us. So we can go to a small community bank and we can give them a single platform for all of the rails, a single cost for all of the rails. So they know exactly what they're paying for all types of payments on the platform. And also be rest assured that it's always up to date. It's going to be a different market in a couple of years' time as you start seeing this trend pick up.
Okay, thanks. So I want you guys to think back to when you first started, or when you heard of a member first starting, or when you onboarded a member of a financial institution starting. And so we'll start with Jessica. Do you have any recollections of what was odd at the time, what happened, and any insights into how easy or how hard the whole process was to onboard?
Yeah, so for us, the process was actually relatively easy because we did go with a partner that we'd already have a relationship with. They built out an existing platform that we're using for our mobile deposits. So the turnaround for learning curves and everything was very easy for us. Leading up to that decision, though, we did take a step back and look at a buy versus build process. We did a proof of concept with the Federal Reserve. We looked at things like building out the messages, what would we need to support on our end, the reporting, the additional fraud mitigations that we would need to implement into the systems, how would it integrate into the core, things of that nature, while simultaneously also vetting out the different partners that we currently use. So ultimately, we did choose to go with a partner that we've been using for several years now for our mobile deposit. And because we've been using them, it was a pretty seamless onboard process for us, and it's worked out really well.
Nick?
Yeah, I would say, Joe, that kind of similar to Jessica, most of the banks that we've heard about going live in receive-only mode, the actual implementation has been extremely smooth and extremely fast. What has taken really the time is the decision-making and all of the considerations on the front end on the part of the bank, whether that's to make a selection in terms of what service provider to use, or how to assess and think about their tolerance for fraud and risk, and how they're approaching mitigating such fraud in an instant payments environment. But the implementation itself has been very smooth. To kind of tie it back to the prior fraud question, we're certainly seeing, even in advance of implementing Send, more of an interest in some of that cross-channel fraud detection and figuring out how they can think about fraud a little bit differently beyond like the network layer, or beyond some of the tools that they're using at the digital origination layer as well. So that's probably what I would highlight from like what's taking them the most time at present.
And Karuna, what are the types of questions you get as far as onboarding while you're onboarding folks?
Yeah, there's always questions around operational aspects, Joe. So this is a 24/7 Rails, right? You used to an 8x8 kind of a model. Now you're going to 24/7. How does it work? Should back office operations be available, right? What happens when you start sending? How you manage some of the treasury considerations, right? You have to manage funding in your master account, things like that. These are questions that, because we have done so many of these implementations, we can help an FI through some of this. And I generally believe RTP and Fed, TCH and Fed, have been very, very helpful to most of the FIs. If you want to set up time with them, they will set up time and they'll run you past the operational guidelines, how to maintain the master accounts and things like that. Providers like us make it easy for institutions because we're already certified, which means you don't have to go and certify. You just have to set it up, test, and once you're comfortable, go live. But there are always questions on operational aspects, funding, your concerns on fraud, and how do you do fraud? Do you need an OFAC? Questions on UI or send capabilities, right? Questions on ROI, questions on what kind of use cases. So we've seen many of those, and we can help an FI in many of those areas as well.
That was a very good segue. I think I remember our practice being some great segues. Use cases. So that was I think that was the next question. Yes, use cases. We mentioned what we're seeing, but just for the recording, what sort of use cases are you seeing? What did you expect? How is that different? Got to start with Jessica.
Yeah, I say for us, what we're seeing is a lot of that wealth management movement coming from investment companies, also the gig industry. Seeing a lot of Grubhub, a lot of Etsy. We were very surprised when we turned FedNow on in April. We were talking with other financial institutions that had onboarded several months prior, just to kind of get an understanding of what their experience was like, what they were seeing, what their volumes were. And several of them said that they weren't getting any. Mind you, this was several months before we went live, but that they weren't getting any transactions. I remember one institution actually said that they only look every 2 to 3 weeks, and just because they weren't seeing that volume there. So we kind of anticipated the same, but very pleasantly surprised. Almost immediately, we started seeing transactions coming through, which was also a very positive thing for our IT department, who spent so much time, connecting to the other platform. So they were happy to see that their time was not for naught. So it was interesting to see how quickly those transactions started to come through.
I would just add on to echo what Jessica shared in terms of how quickly volume has ramped up on the receive side. The only other use cases that I would highlight that we're seeing a lot of is wallet cash outs represent a big portion of the volume, as well as merchant account transfers. We have a number of small business account holders that are benefiting from the opportunity to shift funds from their merchant account into their operating account with a community bank in real time, which is certainly a benefit.
It's all exciting.
Yeah. I would echo the same, Joe. So the key here to understand, right, who's connected to do or send. Most of tech companies who have a platform and who need to get rid of manual recons and bulk files and things like that, they are the ones that have hopped onto the platform on day one. They are the gig economies, the Etsy's of the world, and Robinhoods and DraftKings. You can name it. They all need faster settlement, but they also need a settlement that doesn't require recon, right? And they're the ones that are sending. But we're also seeing a lot of commercial customers start sending because they have some of the larger institutions have provided user experience for commercial customers, or they're able to integrate to APIs, or they're able to generate files for instant payments. So we see that what's going to happen next, probably some of the loan origination pieces. That's one that's going to pick up next. I generally also see a lot of FI's internal workloads. They don't need to offer a UI to their customers. They can start using it for their own purposes. Those volumes are also going to go up. And those are going to drive the send adoption even within an FI, right? Because internally their mortgage team wants a better experience and things like that. So those are some of the use cases to think about. Every institution has one or the other commercial entity or workloads that requires 24/7 payment systems. So if you start looking at that, you will see your own use cases kind of bubble up in that analysis.
So I just want to recap for a second, because that was, I don't know if I caught this all last time we did this, but that was a lot. So first, I thought there was, and then I tried to look for it and I couldn't find. RTP had a guesstimate calculator that said, here's what you can expect for volume. If you turned FedNow or RTP on and nothing started flowing in, that's fine. That could be normal. If you turned it on and everything started flowing in, that's fine. That could be normal. I can tell you that for one member of ours, a community bank, they were receive only. They may still be receive only, but they, from the funding perspective, when you receive only, you're only getting credits. They found themselves going from drawdown. If it's not ACH, I don't really know it, but they were drawing down funds once a week. And then all of a sudden they were drawing down funds multiple times a week, which just shows you once it starts, it will start to grow, I think. Anyone disagree or agree?
No, Joe, you're accurate, right? So most of the institutions that we onboard will start seeing 50 to 100 transactions on day one, right? In general. And the volume starts increasing as more institutions recognize this entity being on the RTP network or FedNow network. So it keeps increasing. Like you said, if you're only receiving, then it's only incoming funds. You're not even maintaining liquidity on a regular basis. So what you're seeing is accurate there, Joe.
And I don't want to take a lot of time, but the other two things I just heard were loan funding. This is like the idea of a car loan where the car agency. The car dealership gets the funding for the car. You get the loan. The person gets the loan and the car. So I don't really think we hear that one as that's a growing use case, but I think that's really, really possible. And the other one that a little bell just went off, faster payments equals faster fraud. But if the internal organization is the one making the transfers, there's a lot less risk if it's the bank's transaction. And I think Fed came out with some volumes, and their volumes went like through the roof. And I think it was because institutions started using the Fed Now to transfer large funds. So there's a plus for fraud prevention if it's your own money. Again, thoughts? I didn't mean to digress.
Yeah, that's actually one of the use cases that we've talked about internally here for when we're ready to send, is sending our internal transactions first before kind of opening the floodgates for our membership. Just trying to get our feet wet and understand, from a liquidity standpoint, what does that look like? From a send transaction standpoint, what does that look like? Working with our accounting team, working with our consumer loans team, potentially our commercial lending, and even our mortgage team. I think Karuna had mentioned something, about being able to fund mortgages faster as well, or closings. So those are definitely use cases that we've talked about starting out with when we are ready to start sending through the FedNow network.
Excellent. All right, moving on. We're back to fraud again, my favorite topic. This question says, have you seen a lot of attention paid to upgrading fraud areas for participants?
Yeah, I would say, Joe, just as a continuation of what I kind of hinted at earlier, is that we're seeing banks start to look at fraud at different levels of their organization from a payment processing standpoint. So the clearinghouse, the Fed have done a really nice job of supplementing the networks with inherent fraud controls, and banks are getting familiar with those different features and capabilities for fraud at the network level. And then the banks are in many cases expanding the usage of some of their existing fraud tools that they might use that are integrated with their digital channels, for example. And then additionally, now we're seeing more interest in that cross-channel fraud detection, something that they could implement or overlay in conjunction with something like, what Karuna might have to offer to really round out their full suite of fraud capabilities.
For the folks in the audience who have the same word dyslexia as me, is cross-channel risk fraud with the UK, or can you define it?
Yeah, so I was really speaking in conjunction with like a bank's going to be processing payments on multiple rails. So Karuna mentioned the multiple rails that they support. Banks should have a full 360-degree view of all of the inbound and outbound payments across all of those rails. So they shouldn't be looking at fraud risk or evaluating a transaction in isolation at that particular rail. They should be looking at it collectively across their enterprise. And so really from a cross-channel perspective, that's what I was highlighting, is having the fraud detection and mitigation capabilities that are continually scanning across all of the rails that they're participating in.
Excellent.
Joe, typically, again, just to add color to it, typically fraud, we've always looked at fraud for wires because they're high-value transactions. They're highly risky. And that's why a lot of institutions always did this for wires. But as you get into newer workloads, you're getting into real-time payments, right? Which means you're pushing payments out in an instant. So you want to cover them as well. But as you get into some of these, you may want to look at fraud between two entities, right? Fraud is not specific to that transaction, but I'm sending money to Nick, and those are the two entities involved. How else am I sending money to Nick, right? What are all the channels that I use, right? So the fraud is always 360 view of all types of transactions I as Karuna make, or Nick as an entity receives on his side, right? So that's where looking at it 360 is important. But specific to FedNow or RTP, right, there's always been a challenge, and everyone asks us what and how and all of those questions, right? The expectation is you should be able to do some level of fraud when you send transactions, right? So the receiving institution doesn't have to worry about it. They just have to do a SAR or a SAM reporting, which is your regular BSA AML process for any transaction that you do, right? And And the benefit of doing that while send is that you're not time bound, right? The transaction hasn't hit the network yet. The 5-second rules and all of that doesn't apply when you're doing the fraud checks. So you have good enough systems that are capable of handling these kind of fraud monitoring. And that's how we look at it. We guide most of our financial institutions towards that. So while it could be daunting, but it's not something not doable. It's already been done quite a few times. There are about 1,200 to 1,500 institutions in there, 25% of them sending. So they're all doing fraud mitigation while sending as well.
You might need to pencil in a session on fraud so we can come back and talk all about that, because that sounds like a super interesting topic. And I'm going to turn it back to you again, Karuna. And this came up at that event as well, the ROI. How do you define ROI on this? Is it table stakes where you have to be in the instant payment business now, or what are you seeing as far as people justifying getting into the instant payments? I think we actually we did have this, and maybe it's letting the cat out of the bag here, but the conversation about, is instant payments going against your interchange fees if someone's using a card network for the same issues? Can you share everything you need to know about that?
Yeah, it's a big topic. Again, if you start talking about ROI, you could go on for days, Joe. But the key thing to understand is this is the future, right? Instant payments is the future. Do you want to be on it, or how late do you want to get on the platform? Is always a strategy call, right? Sometimes you will have to invest ahead of the benefits that you receive. That said, again, this is not a traditional ROI calculation to do, right? And I've seen this many times where some of our institutions would come to us and ask us the question that, hey, I look at an ACH and it's pretty low cost versus I look at instant payments, it's pretty high cost, right? First, to kind of break that myth, there are very different cost parameters from an ACH standpoint, which you don't even account for when you do this comparison of cost, right? There's a lot of manual cost, there's cost of error, there's cost of fraud, everything in there. So because it's an established rail, we look at actual running costs and compare it with all the new costs that's involved with instant payments. That's a wrong way to look at it. The second piece is always cannibalization. Everybody asks me this question of, is it going to cannibalize my wire kind of revenue? Is it going to cannibalize my instant payments, right? The first thing to understand is just the digital payments here in US is growing at 22% year on year, right? Even if it cannibalizes some part of your existing ACH or wire volume, the entire volume is growing. So you're not going to see a lot of cannibalization from that perspective, right? The second piece to think about is if you don't cannibalize those transactions, which could shift to an instant payment, somebody else is going to, right? Which means you're still going to lose it anyways, right? If you don't cannibalize it yourself. Those are things to think about, but there is money to be made. Your commercial customers would be willing to pay a little bit more for transactions on a Saturday or a Sunday. So there's a lot of transactions where you can make more money than what you would have made on an ACH. But you could also offer more value to your customers because you could look at number of transactions that's less than $1,000 on a wire. Those are all better if it's going through an instant payment. That's better value for your customers. That's more kind of stickiness for your customers on your bank. And the last piece that I'll tell you is if you get on instant payments, you're going to attract more deposits into the system. You're going to attract more businesses into the system. That's another way of looking at ROI parameters.
I don't recall any additional feedback, Jessica, Nick, on what you're hearing or what you went through for an ROI calculation?
I don't have anything additional to add to that. Some of what Karuna has talked about are things that we've kind of talked about within other financial institutions when they were in the process of implementing. But no, we captured it all very well.
Great.
Yeah, I think from a receive perspective, a lot of it was not necessarily ROI related, but more like the need to remain competitive, to ensure that you're in the game and able to receive. As we prepare to, really start getting into Send and the community banking side, a lot of the ROI will be driven like how we can tie it to use cases where we deliver value to retail and business customers. So, we continue to encourage banks to really focus on how can we use the payments as the impetus to solve problems, to capitalize on opportunities and so forth. And that's really where the ROI is going to come in.
Thanks. I'm really interested in what that next level is going to look like. I know they didn't expect wealth management transactions to be a thing when they were, rolling out the idea of instant payments. So that was fun to see. I do know that, the vision was I could deliver your product to you, and right there, as I'm handing you the product, you could be making the payment on some sort of, iPad or pad that says, got the stuff, paying you right now, not paying you in advance, not paying you later. I'm really curious on what the market will develop for, hey, has anyone ever thought I could use this for X? Oh yeah, I could use this for X. I'd love to see what happens with that. As far as thinking about partners, and I did a little bit of commercial earlier for Karuna, and I don't mind doing that again, but, as Jessica, as you were looking for your partners, any words of looking for a partner? I know you had the definite buy, or what is it, buy or
build, yeah,
build or buy,
build or buy, yeah. Yep. I mean, we looked at a couple of our partners were getting into the FedNow space. So we looked at our internal partners before really venturing outside to onboard new. We really wanted to avoid onboarding a brand new partner if at all possible. So we were very fortunate in that. I was actually very surprised to learn that Visa was getting into the FedNow space. They were somebody that we had talked to, kind of just tying back to the whole interchange. I think, they were kind of thinking ahead about the potential loss of revenue there from the card rails and looking to see how they might be able to offer additional benefits. And FedNow was one of them. So they were a partner that we looked at and we talked with. Vertify was a partner that we had talked with as well, who we ended up partnering with for FedNow. But yeah, it was interesting to see the different. I think Visa was probably, for me, one of the bigger kind of surprises from that perspective of who is offering FedNow. But yeah, so for us, it was looking internally to see who we already could leverage, if any one of our existing partners, or if we were going to go down the path of building it out ourselves, really kind of what that lift looked like. And then thinking about that from a future standpoint, I apologize. I think it was Nick who was mentioning, just kind of that upkeep of building out the additional message sets as additional technologies were introduced into the FedNow network, kind of just monitoring and managing the 24/7 access points, reporting capabilities, and everything that we had to kind of create in order to support the FedNow was all part of our decisioning.
Excellent. Nick?
Yeah, I mean, in terms of evaluating enablement partners, some of the things I would recommend that banks keep at the forefront, asking who is already integrated with your core in online banking and mobile providers, like who has already established those connections. Cost is, of course, a big one. Careful consideration of cost, since there is such variability in the market. And then also, like, what use cases are you targeting that would be very specific to some of your key customer bases? And like, who do you think will partner with you successfully in attacking some of those? Who has demonstrated some success with those in market would be some of the other things to think about. And then finally, UI reporting interfaces and so forth. Some of the providers have more elegant UIs and reporting interfaces than others. So that's another good one to keep in mind.
Excellent. Karuna.
Yeah. So Joe, I'll break it down into two categories, right? One is table stakes, right? As you're looking at a partner, make sure the partner can get you on both FedNow, not we can get you on both Send and Receive, right? The networks are not going to give you interoperability, right? Platforms like Finzly are going to give you that interoperability. So which means you should be able to offer both of these rails, right? The second piece within that table stakes is, are they a cloud native provider, right? Can they set up a system on the cloud, manage? You don't want to go back in time and start hosting these platforms. It's just too painful to start hosting, right? And do they maintain these platforms up to date, right? These are all table stakes just to make sure that you're getting on a platform that has a future, right? After 5 years, can I still use this platform? is a key question to answer that. The second thing to think about is what do I have as workflows and would this partner help me, right? Do I need APIs, right? We started with branch transactions, then moved to web, then to mobile. Now a lot of transactions goes through mobile. The next stage of that is API transaction, right? And that example of that is all of the transactions that we're talking about, the transactions coming from platforms like gig economy platforms and all of these wealth management platforms. They're all coming in because they're being created through APIs, right? They are not a UI-based transaction. They're generated from APIs, which means, does any of your customers require API banking? Would you need to offer APIs, right? Would you need an UI? Is your existing digital online banking provider giving you an UI to send? What is their timelines to send? Should I think about a vendor who has all of this, right? There's a lot of these differentiating factors that you need to look at based on your timelines. You have a strategy as to when you want to offer receive, when you want to offer send, what do you want to offer on APIs, things like that. So the differentiating factors are the second piece, right? Make sure the table stakes are there and make sure that for your requirements, whatever strategic requirements, compare it with what the vendor offers. So that's what I would recommend.
I have a side question, sorry, and this one's for Jessica. My first introduction to instant payments was in a middle of an operation center, and it was a pretty big operation center, and they, wire was over there, ACH is over there, and I said, well, where's instant? They go, oh yeah, that computer over there, that's it. Is it a big lift, the day-to-day on instant?
For us, it's not. Again, being a receive-only institution, there's only so much we can do, right? We're not sending, we're not inputting anything. Really, the biggest thing for my team, I actually have 3 people that rotate every day what the FedNow processes. It's really those accept without post transactions. So those transactions that fail for some reason or another, that's what they're looking at every day. They look at it throughout the day, and then they will do the research necessary to understand why did that transaction fail. And it's not a lot of transactions, it's a couple a day. But they'll look at why that transaction may have failed. And if they're able to post it, they will post it. It might have failed because there's a specific flag that's on that account that just, for whatever reason, stopped that transaction from automatically posting, which is about 99% of the time. Sometimes we do have to return that transaction or reject the transaction for, various reasons, but that's very, very rare that we do that. But they'll manually post those handful of transactions a day, and then we work with our accounting department just to make sure that the GL balances at the end of the night. But that's really for my team, that's the lift. Like I said, I have 3 people that are cross-trained in the FedNow process, in the FedNow, in the system that we're using, and they rotate each day. So one person is on that process, and every hour or 2 they'll go in and just look to see if there was any transactions that didn't post.
Well, that's very nice of you, because I know a lot of institutions accept or reject. So that's very nice of you.
And as volume grows down the road, that might be something that we're not able to support. But today it is something that we're able to support. We want to make sure that if our members are intending to get those funds, if we can post it on their behalf, we want to be able to do that.
Very nice.
Yeah.
All right.
So this is a great kind of example of mythbuster with instant payments. We try to compare cost in a wrong way. So with ACH or wires, there's a lot of manual activity. You need a big wire room and things like that. Whereas instant payments can be set up for 100% straight through processing, near 100%, right? If just Jessica saying about 2 transactions a day, imagine the number of transactions going through and there's only 2 that needs to be touched. You can even reduce that to a much lower number, right? Near 0 can be achieved, which means the transaction is either going through or doesn't go through, right? The simplicity of the rail is just amazing for operational purposes.
In seconds, and that was the toughest part to get over. The computer was just sitting in the corner, and if you have a accept or reject, no one talks to it. No one does it. It doesn't blow up. There's no exception list in the morning. It was pretty impressive. Again, I was in an operation center with maybe 50 people, and no one was in that corner. Very interesting. All right, I think this brings us to our last questions, and then you guys can have any final words you want. I don't think I like the way this question is worded. So I'm going to reword it with where do you see instant payments going just this year? Let's just talk about this year. So last year we had, the year before we had FedNow launch. People were jumping on. Same time, RTP's rising in volume. They just expanded to $10 million transactions. What's the news going to be like this year about instant payments? Any thoughts?
I mean, from what we're hearing from our members want faster money movement. So I really just see instant payments continuing to grow and just expanding use cases, I think, are limitless, really. It's just a matter of what institutions can support. And I think that it's going to be something that customers and members almost expect their financial institutions to be able to support in some way.
I'll go a step further, Joe, and I'll tell you this, right? If a financial institution is not offering send for their commercial customers, they are missing out on something, right? There's revenue to be made. If you're not offering it, you're missing out on something. You're going to see a huge jump in volume from commercial customers this year. The other piece that you're going to see is a lot of credit unions focused on member experience is going to offer send for their consumer members. So if you are an innovative credit union, you are going to send this year. That's going to happen. And the last piece that is going to get started is the request for payments, right? This is something, it's a pretty large topic and it's going to take a lot of time to adopt, but it's a potential to replace ACH debit with a more secure request for payments on RTP and FedNow. And I expect that to kickstart this year. There are so many institutions that are already doing that, but that's also going to happen this year. So that's what I'm seeing. The others, in terms of number of institutions onboarding and number of send participants, number of transactions, they're all going to grow. But these are three key things that are going to happen this year.
Just a quick commercial before Nick goes on. We keep seeing records broken for volume. Super interesting. And if you're one of the networks, request for payment it's like the golden gem. They talk about it like it's going to change the world. Sorry, Nick, over to you.
Yeah, no, I would just echo what Jessica and Karuna had shared. I mean, I think we'll continue to see more of the same volume continue to go up. I think for 2025 for community banks, this is probably going to be the year where you're starting to see more and more start to get into the send game. So in terms of like what will define 2025, I think that will be the big shift for community banks.
Excellent. I want to thank you again for joining us. I'm sure we'll intermingle some of these slides within. I want to say this is a complimentary session for members. I hope you enjoy it and stay tuned for more. What was that session I said we should talk about? I think it was fraud. Anyways, we'll get you guys back here. Thanks for joining. Any other final words?
I don't have any final words. Thank you very much for having us. It was really great to hear more about what Karuna and Nick had to share as well.
Yeah, no, you guys are such a great cross section. It was a really good group. Thank you, Karuna.
It's always fun to have these conversations, especially with different types of practitioners here, Joe. It's different worldviews, different types of transactions. Always love these chit chats that we have. Anything that we can, as an industry, help to promote and educate, and as much as possible spread the information is helpful, and we're always happy to do that.
Thank you. Yeah. Final word, Nick.
Thank you. Enjoy the opportunity to talk about instant payments. Looking forward to 2025. So thanks, Joe.
Excellent. Thanks, everyone.
Thank you.
Thank you.